We continue to update our advice and guidance as further advice and guidance is issued by the Department of Labor, the SBA, the Treasury, and particularly on the Paycheck Protection Program Flexibility Act. As we go through the presentation, if you have questions, please enter them into the chat box and we'll have time at the end for questions. We'll also make ourselves available to you to address other questions that you may have that are very specific to your unique situation. After the webinar, you will be able to reach us at 631-794-7400 or info@compasswfs.com. If you are an existing client, of course, you have access to your own dedicated team and you may contact them directly. Everyone who registered for the presentation will receive access to the slides and a recording of this webinar via a link sent to the email that you used to register. Before we begin, I'm just going to share a little bit about Compass for those of you who are not familiar with us or may be joining us for the first time. We are an award-winning human resource firm dedicated to providing HR expertise to small and medium-sized businesses. Our work is focused on key areas of HR that make a difference in business profitability, scalability, business evaluation. And those areas are compliance, operational controls, dealing with workplace conflict, and payroll preparation. We provide solutions to address requirements and obligations of the federal, state, and municipal level. And while we serve clients that are headquartered in the tri-state area, our work is national in scope. During the COVID pandemic, we have supported our clients in transitioning to remote work environments, transitioning employees to furlough or layoff, and now, fortunately, we're starting to bring people back to work. We're performing return to work surveys, we're documenting processes and procedures to address employees who may test positive for COVID-19, managing the FFCRA leave requirements, and integrating those leaves with other employee benefit programs. Dominique and I today are, of course, adhering to social distancing requirements, and each of us is in a different location. I'm going to be taking the first part of the presentation and addressing what are Workshare programs and how Workshare programs can be used in partnership with PPP loans. Dominique will then take us through the benefits of participating in Workshare, what type of considerations need to be made as we're thinking through Workshare programs, how the Workshare programs work, and when is the best time to use them. Dominique is also driving the slides for us, so on occasion you may hear me say, please move to the next slide. So welcome and thank you for joining us today. Workshare programs are not new tools. These programs have been around for some time, actually as early as 1978. And the intention of a Workshare program is to be used to reduce layoffs and furloughs and retain employees during periods of hardship or seasonal drops in businesses. Now, under the CARES Act, there are several critical updates that dramatically increase the power of Workshare programs. The first one is, under the CARES Act, programs are now funded by the federal government, meaning Workshare does not count against your individual employer unemployment rating for plans that are filed from March 30th through December 27th of 2020. This is a dramatic change, and it's one of the reasons that employers may have been hesitant to use Workshare programs in the past. Unemployment insurance charges can go up to almost 10% in payroll taxes. So, not incurring these costs is critical. Also, the other power of Workshare right now is the federal pandemic unemployment assistance, which gives any employee that is on unemployment and qualifies for $1 of state unemployment benefits an additional $600 per week. So this is a very powerful tool. Right now, also because the Paycheck Protection Flexibility Act was passed, we now have more time to use our PPP loans up to 24 weeks. And Workshare programs help you stretch out with PPP dollars. So Workshare provides a tool for employers to start getting their employees back to work with the higher level of benefits they would have been receiving on unemployment insurance. This is critical, as many frontline workers who were making $15 an hour or less were making double on unemployment with the enhanced unemployment benefits versus what they are making at work. Now, Workshare is also dramatically different than partial unemployment in that it is much more flexible, and you are not subject to the weekly cap on wages for someone to be eligible to receive the Workshare unemployment benefit plus the federal $600 a week. Dominique, please take us to the next slide. So this slide is an overview of the states that currently offer Workshare programs. There are 26 of them. So green stands for good. These are states that do have Workshare programs. As you can see in the Northeast, a lot of the states are participating. Now, every state is a little bit different. So for example, New York State allows for part-time and seasonal employees to participate in Workshare programs. Not all states do. Workshare programs are also based off of a 40-hour work week, and they're not intended to make up for reductions in overtime. Right now, under the CARES Act, some states, including New York, are allowing officers to also participate in Workshare programs. So for small companies, this is particularly critical. New Jersey also offers Workshare, although New Jersey, you must have at least 10 employees in order to be able to have a Workshare program. So as you look at your state and identify the states that you are doing business in or states where the employee is performing work, that is the state in which you would need to file your Workshare program. It's important to understand the significant variances that occur by state, including different filing and pre-filing of Workshare program processes, the certification process, the percentage reduction in hours, and who can participate in the Workshare program, as well as the level of unemployment insurance benefits available. So in New York, our weekly benefit is $504 a week, but in other states, that significantly varies. I think New Jersey is $721 a week, California is $475 a week, and Florida is only $275. So you can see the level of benefit available to employees under Workshare can be significantly different, although the federal $600 a week is available to all of those employees. Next slide, please, Dominique. So I touched on this in the beginning, and combining Workshare, or what some states refer to as short-time compensation, really allows for business owners to balance the trade-off of PPP loan forgiveness and bringing people back to work. Now, this was a true conundrum for many people as employees were making more and sometimes twice as much on unemployment due to the $600 a week in federal pandemic unemployment assistance versus what they were making at work. This happened for us on several occasions, and particularly in New Jersey where minimum wage is lower. So we had a client who has warehouse employees, and the warehouse employees make anywhere from $11 to $14 a week. So as you can see, they generally were making significantly more while they were on unemployment. So Workshare combined with PPP allows the employer to give that additional benefit to bring people back to work, and that's powerful. Right now, employees may have had salary reductions or hourly rates reduced. They may be struggling to resume buying their public transportation tickets or paying for daycare, and that $600 a week is allowing them to come back to work. So it's important to understand, if you are going for PPP loan forgiveness, what percentage of reduction in hours worked a week you're allowed versus the range in the Workshare programs. So in New York State, you can allow for a reduction from 20 to 60% in hours. But if you want to go for true loan forgiveness, that reduction under PPP can be no more than 25%. So it's important to take into account, do you want to get maximum forgiveness on your PPP loan when you're designing your Workshare program? It's also important to note that for those employees making in excess of $100,000 a year, that 25% maximum reduction does not apply. So those employees may be reduced more. And again, we talked about prior, some states are allowing owners and officers to be eligible for Workshare, and this obviously applies to them. So when we look at 25% forgiveness, that means based on a 40-hour work week, an employee could work up to 30 hours a week. This could be spread across every day. So for example, they could work 5 6-hour days a week and still be eligible for Workshare. If you're familiar at all with partial unemployment, New York State would not allow this arrangement, and that particular employee would not be eligible for partial unemployment benefits, because when someone is working more than 4 days a week, they lose their partial benefits. So Workshare is much more advantageous to the employee than partial unemployment and gives the employer much more flexibility. There are some downsides, particularly in planning and administration, and Dominique is going to take us through all of those considerations as we move forward in the presentation. So Dominique, thank you. I'm turning it over to you.
Thank you, Christine, and good morning, everyone. Short-term compensation, or AKA Workshare programs, are probably one of the most, if not the most, poorly marketed tool, both at the federal and state level. They are those, programs that typically collect that proverbial dust and are resurrected when serious downturns in the economy occur. As the Assistant Secretary from the U.S. Department of Labor has put a promo piece that he describes short-term compensations as one of the many tools that employers can use to retain connection with their employees, ease the financial impact on the crisis on their employees, and to be ready to re-engage quickly as business restarts. So from an employer perspective, the two most relevant benefits derived from engaging in this program is the retention and re-engagement of employees, retaining that valuable human capital while being flexible with your payroll costs, if you may. Before we get into the specifics of Workshare programs and how they work and what's entailed and who benefits how, I thought I'd give you a couple of facts. One Christine already mentioned, that are always helpful for those of you that you like to partake on an occasional HR Trivial Pursuit game. So the first time the Workshare program, or short-term compensation program, was introduced ever was in Germany in the 1920s. So those programs are nothing new. They have some good age to them. They were really a tool to manage unemployment rates. In the US, as Christine mentioned, it was first introduced in 1978 in our dear state of no surprises there, California. And work sharing became a permanent part of the federal unemployment insurance law in '92. And from that point on, states have the option of initiating their own work sharing programs as they choose. So work share programs are state developed and administered, and that's why we see a lot of variation in eligibility and filing and reporting requirements. So how do Workshare programs work? In principle, the process is not that complicated for establishing a Workshare program. So really two main steps. The first one is you as the employer figure out what you need to do in terms of our reduction in hours and corresponding wages that go with that for on a temporary basis for some or all of your employees, and then you file that plan to your state and you get approval from your state to proceed with implementation of your plan as put forward. In turn, your affected employees become eligible to collect partial unemployment benefits, enable them to recoup some or some of their lost pay. Full-time employees under a Workshare program who are monetarily eligible for benefits receive a weekly benefit that is prorated based on the weekly work hour reduction. So if you reduce an employee's work hours by 30%, they will get 30% in effect of their weekly unemployment benefits. The requirement that they actively seek a new job, it is waived for anybody participating in your Workshare program, because the goal of the program is to keep your employees engaged and attached to you as the sponsoring employer, not to get them alternate work. The beauty of this type of program, as Christine mentioned in the beginning, is that this is a program that your higher paid employees can and do benefit from, since short-term compensation weekly benefit is payable regardless of earnings. Unlike partial unemployment benefits that place a cap on the actual weekly income you can generate in order to be eligible. Just to make it a little bit more real, what the impact on employees is, let's look at an example for, with dollars and cents for 2 employees. So this looks at 2 different, we're using New York State with the parameters within New York State unemployment benefits, 2 employees, an hourly and a salaried employee. In the case of an hourly employee working 40 hours, earning $20 an hour, weekly, paycheck of $800, if you laid them off or furlough them, their eligible unemployment benefits for the week would be approximately 50%, so $400 a week. Under a Workshare program with a 25% reduction to stay within that PPP, range, this individual would make $600 in their wages. They would get an additional $100, which is a quarter of their weekly unemployment benefits, plus the $600 pandemic unemployment compensation until the end of July. That would make this individual bring home $1,300 a week, quite a jump from the $800. In the case of a salaried employee who is making, let's say, approximately $60,000 a year, or the equivalent of $1,200 per week at $30 an hour, you do need to be mindful about exempt employees, salaried and exempt employees. You may have to convert them to hourly before going into a Workshare. This individual, if you laid them off, they would receive $504 in weekly unemployment benefits, which is the max in New York State. Under the Workshare program, at a 0.25% reduction, this individual would bring home $900 in weekly wages. They would get $126, the 25% of the $504 of their unemployment benefits, plus a $600 PUC. So a total paycheck for that week would be $1,626. Again, as you can see, by not laying them off and keeping them in a Workshare program with 25% reduction, those employees derive much greater benefits. Even after July, even if we take out the $600, the sell to the employees is that employee number 1 would still be bringing home $700 compared to if they were completely laid off, and they would be bringing $400. Very much similar with a salaried employee. Even with a $600 PUC taken out, they would be at a little over $1,000, which is twice what they would get in weekly benefits if they were fully unemployed. Also, the very nice part about the Workshare program is under If you reduce those individuals' hours, they wouldn't be eligible for partial unemployment benefits because they exceed the weekly income threshold posed by the state. However, under the Workshare program, they would still receive their benefits, the percentage of the benefits. So what are some typical requirements? Even though there is great state variation, what are some things that, are common themes that you need to be mindful of? And there are there is some alignment in a broad sense around the magnitude of the impact that you can have and the eligibility of the employer. So even though they vary by state, every state needs the employer to put a plan forward that defines who's impacted within a specific unit. You as the employee is really responsible for defining what that unit or group is. It could be your entire company, or typically is a department, a function, a shift, or a location. Now, for each of, if you have multiple plans for different units, you need to submit different plans for approval to your state. Typically, employers also determine the duration, how long you want the plan to be implemented in your particular location or company. You can submit plans that can last up to 26 weeks, or, a maximum, states allow a maximum, I believe, of typically up to 52 weeks. Now, you as the employer, should circumstances change, you can interrupt or, stop the program at any point, or you can engage it intermittently. You can use it 1 week, turn it off the next week, depending on how the business fluctuates. The range of the work hour reductions, as Christine mentioned, varies again from state to state. Some states have a minimum as low as 10%, and some states have a maximum of up to 60% of work hour reductions. Now, typically, states require employers to have at least 2 employees within an affected unit. Places like New Jersey have slightly different rules that even can be considered to apply for a Workshare program. You have to have a minimum of 10 employees company-wide. So you need to be mindful about how many people need to be in and what you as an employer overall need to do. Also, you need to make sure that you commit to providing health or specified retirement benefits and continue those unchanged during the participation in the program. States require that you do not touch that, even in proportion to the reductions. There are some states that allow you to reduce or eliminate only if it impacts all employees across your company, not just the individuals who are impacted or affected by the Workshare program. If you do have a unionized workforce or environment, you do need to prepare for getting explicit approval from union representatives before you submit your paperwork. And New York State has actual lines where the union representatives need to sign off that they reviewed and there is agreement with moving forward with a plan. And finally, all programs across the states have some kind of reporting requirements. Nothing is for nothing when you engage in state-supported programs. They want to stay informed, very much like your employees will need to go and certify weekly, like similar to if they received regular unemployment benefits. You, the employer, needs to certify every 1 or 2 weeks, depending on the state, submitting the names of the employees that were impacted for the preceding week, the percentage of time that they worked, their social security numbers. So pretty detailed, and those are programs that are tied to specific individuals. So what are some things you need to be thinking about as you plan to put this program in place? Well, the first thing you need to determine is what's your budget based on the economic conditions and where your business stands right now. How many people can you afford, and how many people ultimately will be in the affected unit? How many people do you need to put in reduced work hours to meet the demands of your business? You also need to figure out what the number of employees would have been that you would have to lay off if you didn't implement a Workshare program. Because ultimately, remember, a Workshare program is in lieu of layoffs or furloughs. Basically, the state wants you to keep those people engaged rather than fully put them in the unemployment system. Once you figure what the people that you would need to lay off are, typically you can backtrack and say that will give you how many people will be impacted in order to achieve the same payroll cost reductions and how many hours you need to reduce to get where you need to be. You also need to think about how employees will be notified in advance of the plan. Many states, including New York, do explicitly ask for what's your communication plan for getting all employees on board and informed about the impact of the plan. You also need to be prepared to make a commitment that the benefits will continue to be provided unchanged, as well as certify that affected employees may participate in training to enhance their job skills during the program. Again, this is very different from, let's say, a furlough situation where employees are not allowed to participate in employer-sponsored training programs. So there are some additional kind of side benefits to this. So let's talk about kind of what are the benefits. If there are so many requirements and they vary across state, why do it? Well, the first and main reason, and that bullet is not in bigger font by accident, is because Workshare programs do provide you with flexibility that allows you to preserve valuable human capital while managing your payroll costs. Because remember, Workshare programs do not preclude an employer from conducting layoffs or furloughs, including individuals who may originally been included in a Workshare program. As you as the employer adjust to changing economic circumstances, you can simultaneously create a Workshare program that you can incorporate your core group of employees you want to retain, like your A team, and at the same time lay off or furlough other employees. In addition, as I briefly mentioned before, you can flex your Workshare plan from week to week. For example, if to meet your fluctuating demands of your business. So if your work unit works at a 25% reduction, but you get an influx of orders that require an uptick on your production to meet that demand, you can shift them week 2 in 100% capacity, and then drop them back to, let's say, 40% because you're all caught up and there are no more things coming in. As long as you kind of make sure that you track, you document, and you report back, the state benefits will be adjusting accordingly. So at 100% capacity, there will be no benefits paid out for that week, and they re-engage the following week. All those options give the employer flexibility that is often lost with a layoff, and it's flexibility in both meeting the changing business demands as well as retaining client that it's hard for you to replace. Because of the flexibility, obviously you will have some savings or at least some flexibility in managing your payroll costs. In addition, believe it or not, there's been research in employers who engaged in this program in the past decades, and they showed not only there was that flexibility and retention of talent, but during the employees being in a Workshare program, they showed an improved morale and improved productivity. So there were some fringe benefits coming out of you caring enough to keep your employees on board. Also, the thing that may allow you to do is if you did a layoff and you saw that there was maybe a disparate and disproportionate and disparate impact on certain protected categories, and that applies for employers who are required to file annually under the EOC. If your layoff plan did show some disparities, whether it would be based on age or on gender or on ethnicity, then a Workshare program may be a nice alternative that you should look at, because it would preserve part of that proportion in your workforce while getting you the reductions that you need. So there's some good things happening for employers. What about employees? Well, the most important benefit is employees get to keep their jobs, which is pretty big in a downturn economy. Not only they get to keep their jobs, but they also get to make up some of the lost income, as we saw in the examples. They get to preserve their health and retirement benefits that you as the employer provide. So continuity of those is really important to many people. It alleviates some of the stress of needing to look for another job during a bad economy. We all been in those situations and we know how stressful that can be. It does allow for them to retain their skills by the mere fact that they're continuing to be engaged in their job. Also eliminates those dreadful employment gaps in somebody's resume that you try to explain and kind of fill in with how you kept your skills up to date. And it also allows them to upgrade their skills and make them more marketable in the future. As an employer, this is a time that you can offer skills training if you anticipate changes in your industry, and you're perfectly within your rights to get those employees engaged in that training to make them more valuable to you as the business, as well for them to make themselves more marketable. So some really great things come out of Workshare programs, but what's the catch? There's always a catch. There are some things to be mindful and watch out for. The first and most important one is be mindful of the complexity, particularly when you have multiple locations as an employer or operate across state lines. Remember, every unit that has a certain, a different reduction, every location, and every, and in each different state, you need to have separate plans submitted for approval. And one state is bad enough. If you have to be mindful of all the idiosyncratic variables in each state, that can get pretty complex and pretty labor intensive real fast. Also, keeping in mind complexities of how you handle exempt employees and how that may impact some FLSA rules and what you need to do. You can always convert them into hourly, at least for the duration of the Workshare plan. But you need to be mindful of those things. Cost, it's more about managing costs rather than having huge cost savings out of it. As we kind of talked about, there could be things that you need to put the pen to the paper and run the different scenarios with how a Workshare program would impact your bottom line. Administrative costs may be too great. That may balance out any payroll savings that you would be getting out of participating in a program like this, or kind of getting hit in terms of your experience ratings, your unemployment experience ratings, and your subsequent tax rates may balance out any cost savings you may be getting. You also need to be mindful, as Christine mentioned in the beginning, about all the other things happening in our current environment that may be intersecting or impacting or limiting what you can do between a Workshare program and other kinds of plans out there that you're participating. So to give you an example, the CARES Act, as Christine mentioned, does not provide federal reimbursement for shared work benefits paid to temporary, seasonal, and intermittent employees, even though New York State, for example, allows those individuals to participate in your Workshare program. While you won't get charged back as an employer for your full and part-time employees, you probably will get charged back for the temporary, seasonal, intermittent employees, impacting your your unemployment insurance contribution rates. So, as with all things in life, there are pluses, there are minuses. Figuring out if and how to use a Workshare program in a most effective way can be sometimes a little bit of a tough chess game for strong players. I think we will leave you with some of our thoughts of when we think would make the most sense to consider the use of a Workshare program. And the first point that you need to kind of ask yourself is, do I have enough business to even make it worthwhile? So your business must be at least partially active in order to say that a Workshare program may be a viable option for you. Also, if your workforce has certain characteristics, I think Workshare program is really like your go-to as a first answer or solution to managing your workforce and your payrolls costs. So if your business relies on highly skilled or specialized staff, that you would have, if you lay them off and the business came back, you would have a very hard time recruiting, hiring, onboarding, and training. Workshare program may be a good solution to retain those individuals, even if it is in a reduced schedule. If you're one of the lucky companies before the pandemic that finally had their dream team in place, right? You had a group of employees that were, very loyal, very well performing, and now you have to disband it because you can't afford them. Looking at Workshare program and how maybe you can fluctuate or reduce their work hours while retaining all of them, so not having to go through that painful process of putting a dream team together would be a good way to start. Also, if you rely as a business in a large workforce and you anticipate a quick uptake once the business returns, Workshare programs definitely are worth taking a look. Let's say if you work in a busy fulfillment warehouse and you expect your business, once everything reopens, to go back to normal, laying all those people off may not be easy to replace in a quick order. So you would have lost opportunities in terms of, fulfilling business and keeping customers happy. So definitely that's a situation to think about a Workshare program. And finally, you can consider a Workshare program if it doesn't take away from benefits you're deriving from other programs you're participating, like, if your goal is loan forgiveness, maximum loan forgiveness, as Christine said, you do want to tread carefully with how you lay out a Workshare program. And at this point, I know I'm kind of did a lot of information dump. We will pause and we have a few minutes left and we'll open it to questions. Christine, I don't know if you monitored if we have any questions or anybody wants to ask a question.
Yes, we just received one question. So please remember, if you have a question, go to the bottom of your screen, click on the little white blurb that says chat, and you can type your question into the chat box.
Or you can unmute yourself or your phone and you can just ask it. Right, Christine? I think we have.
We do have one question. It says, if you enter the Workshare program, are there requirements for a company to bring back employees to their full wage hour prior to entering the program or by a certain time frame? So this is an important question. And yes, some states do require that an employee needs to have at a minimum 1 week of regular work before entering Workshare. So California has this particular requirement. And again, it's, depending on the states that you're operating in, you need to be mindful that how you submit that program and how it's designed can be very different on a state-by-state basis. Okay, we have another question. PPP and Workshare. So if you are trying to get full forgiveness on your PPP loan, one of the requirements, well, there's a couple, right? So you have to spend right now 60% of your PPP loan on payroll expenses. You also cannot exceed a 25% reduction in an employee's hours or compensation and receive full forgiveness on that employee. So with the extension of the PPP to 24 weeks, those employees need to be restored by December 31st, or if you're using the 8-week period, by the end of the 8-week period of your PPP loan. We have another question. Is there a link for further info specific to New York State? Yes, there is. New York State has a dedicated page in regards to the Workshare program. We can certainly post that link when we post the recording, as well as links to some of the other more popular states that we deal with on a regular basis. I'm not sure if anyone else is typing or if anyone else has additional questions. As Dominique said, we do have a few more minutes. Like I discussed in the beginning, everyone will receive a link to the full recording of the webinar and the slides. We will be posting those on a page on our website that's dedicated to this COVID-19 period, and that is also where we can put additional links to Workshare programs by state. It seems like we've reached the end of the questions. So we thank you very much for joining us today. We know obviously that everyone's time is extremely valuable, and we appreciate you being here with us. Thank you, and please stay safe, healthy, and well.